everybody, and welcome to Mindset Learn Extra. We're all live today, and yes, tuning in studio with you guys. It is, of course, Pumi. And today, we have a Mindset joining us in studio. Hello, Tata.
Hi, how are you?
I'm alright, thanks. How are you?
I'm very well, thank you.
Please tell us, which school are you representing?
I'm representing Crawford College Santon, and we're going to be doing accounting, so that's
okay.
cool. Yeah.
Are you excited about it?
Yes, I am actually.
Whoa, okay. She is definitely going to be showing me a few things when it comes to accounting, because I have no clue when it comes to accounting. Okay, guys, please make sure that you jump on over our Facebook page if you would like to take part on our show. But before we can get to that, let me just quickly say hi to Mahisha. Hi, how are you?
I'm fine, Pumi. I thought you forgot about me.
No, I wouldn't have.
Okay.
Are you good though?
Yes, I am.
Oh,
I am a
great.
bit tired. First week of school, so
Yes.
always absolutely exhausting, but I'm ready to go.
Yeah, definitely. It is almost the weekend, so we'll just get to relax.
Yeah.
But then again, my senses, please do remember that you can log on to our Facebook page. It is, of course, www.facebook.com/Learn Extra. That is where you can post all of your questions, because we're definitely here for you guys. We are here to answer all of your questions. So if you have all of them, make sure that your friends join in as well as we walk the journey of accounting. Right, Manisha?
I love that. Walk the journey of accounting. Okay, guys, in today's lesson, we're focusing on the income statement. We're doing a bit of revision of the June exams. So we're going to focus on the income statement and obviously some year-end adjustments. One of the adjustments we're going to come across will be asset disposal, and we're also going to be looking at some of the notes to the financial statement. Right, let's get started. The challenge question for today's lesson, guys, it's quite straightforward. It's not difficult, so I'm sure lots of mindsetters are going to get this one correct. Right, your challenge question. Tato Limited financial year ends annually on the 28th of Feb. The loan statement received, okay, so you're given a loan statement received from ABC Bank on the 28th of Feb 2014 reflected the following. So there's a loan statement given to you. Okay, I'm not going to read through the loan statement. Starts off with your opening balance, and then you've got your closing balance. In today's challenge question, you're going to calculate the interest expense that will be reflected in the income statement for the year ended 28th of Feb 2014. Okay, so that's our challenge question, mindsetters, for today. Right, let's move on to the question that we're going to be focusing on in today's lesson. The information below was taken from the records of Gugu Limited. The financial year ends on the 28th of Feb 2014. You are required to, okay, so let's look at what we're going to be completing before we go to the actual information. You're going to prepare the income statement for the year ended 28th of Feb 2014. Okay, so mindsetters, income statement, remember, you're looking at your matching principle. So we're going to focus on the financial year 1st of March 2013, ending on the 28th of Feb 2014. Okay, let's just write down 2014. Right, then we're also going to be completing the following notes for the balance sheet. So trade and other receivable, trade and other payable, and also, guys, complete the trading stock account in the general ledger. Right, the very last question deals with the GAAP or GAAP principles, but we will get to that. Okay, let's go now to our information. So the information given, we are given an extract of the pre-adjustment trial balance. Okay, so there's my extract. And let's now go to our answer sheets, because we're going to come across now our adjustments. So there's our adjustments. We're ready to start, and I know exactly what you're thinking, but hang on. Shouldn't we first take our balances from the pre-adjustment trial balance, and let's put that into our income statement. Now what I've done, and I want to show you guys, is if we go to our answer sheet, okay, there's my income statement. What I've done in order for us to focus on year-end adjustments, guys, is I've already brought down balances from that pre-adjustment trial balance. So if you are confused, you're not sure where these amounts are coming from, Tato, it's coming from the pre-adjustment trial balance. Okay, right, so let's get started. Let's go to our adjustments.
Okay.
Right, adjustment number 1, guys. The details of an employee, T. Mayer, who was appointed on the 1st of February 2014. So immediately, if I go to my timeline, 1st of February is part of my financial year. So he was appointed on the 1st of Feb 2014. We omitted meaning left out, from the salaries journal for Feb 2014 by mistake. Okay, everything happens by mistake in accounting. Right, the details of his salary were as follows. Right, so remember guys, pre-adjustment trial balance, this bit of information was omitted, it was left out. And remember, our financial year ends on the 28th of February. So anything belonging in that timeline, February forms part of that timeline, needs to be, Tato, included or excluded?
Included.
Included, good. Right, so I've got his details: gross salary, 10,800. His deductions, SARS PAYE, what he pays in terms of tax, 1,020. And then I've got the pension fund, 660. Right, if we read further, there is another part to the adjustment, but what I want to look at first is the first part of the salary adjustment. Now remember guys, gross salary is the expense for the business. The expense, the salary expense for the business. 10,800 Rand was omitted. So in other words, this 10,800 Rand now needs to be included under salaries, under our expense called salaries. So I'm going to include 10,800 in my income statement. Why income statement? Because all income and expenses go into that income statement, and this is obviously an expense. Let's now look at your deductions. So I've got SARS PAYE. So from that 10,800, a certain portion has to be paid to the receiver. So we're now owing SARS for PAYE an amount of 1,020. SARS PAYE is a liability, L for liability, and we are owing the receiver 1,020. So I now need to include this amount in my, not income statement because it is a liability, but in which note, Tato?
In your trade and payables note.
Trade and other payables, good.
Yes.
Right, and then I've got my pension fund, 660. I am owing, when I say I'm obviously talking about the business. The business is owing the pension fund. This hasn't been included. It's obviously been left out in error. So another liability, 660, again left out, so needs to be included in the note trade and other payables. Okay, now in terms of this bit of information, what about the employee? What about T. Mayer? T. Mayer has to get something as well, isn't it? It is his salary.
Yes.
So we've got the gross salary, we've got the deductions, we've got the pension fund, but what about his net salary? What he takes home?
Okay.
Okay, so we now need to look at his net salary. Right, Tata, I'm going to ask you to help me.
Okay.
Gross salary, 10,800.
Okay, got that down.
How do I get the net salary?
You subtract the deductions and
Okay.
you would get the net salary.
Good. We're going to subtract the deductions and we're going to get our net salary. So let's do just that. 10,800 minus my SARS 1,020 and minus the 660 to get an amount of 9,120.
Yes, that's correct.
And that's his net salary. So 9,120. Net salary gets a very special name.
Creditors for salaries.
Ah, Isn't she brilliant? Okay, creditors for salary, and this is also a liability, guys. Creditors for salary, and because it's a liability, it's included in my trade and other payable note.
Yeah. Is that in the balance sheet?
That's in the balance sheet.
Okay, perfect.
Okay, right, so I've discussed the adjustment, so let's now go to our answer sheet and let's fill this in. So we're going to start off with our expense that was left out, 10,800, and we're going to put this into our income statement. So in my answer sheet, income statement.
To salaries.
Okay, yeah, salaries, correct, and I'm adding an amount of
800 rand.
800. Okay, right, remember guys, the 79,200 came from my pre-adjustment trial balance. Okay, right, let's go back to the next amount. The next amount is the SARS PAYE 1,020, and this is going to be recorded in my trade and other
Payables note.
payable note. Let's go to that note. Okay, so trade and other payable. Okay, SARS PAYE, and the amount total is
1,020.
1,020. Okay, remember guys, you can show this in brackets, but it is the only adjustment for salaries. I'm taking it through. Right. Okay, so done with trade and other payable, SARS PAYE. Then I've got pension fund, 660. So again, trade and other payable. In my answer sheet, there's my pension fund, and the amount, I'm going to open brackets here, 660.
Yeah.
And then finally, the last amount is the amount that we just calculated. Creditors for salary. Okay, so let's go back to the adjustment. Our creditors for salary, an amount of 9,120. So in my answer sheet, 9,120.
Yeah.
Okay, right, that's the first part to the adjustment completed. Let's now look at our second part, still on the same adjustment. For every 1 rand that the employee contributes, okay, so we're still talking about T-Mayor,
Okay.
to the pension fund, the business contributes 1 rand 50. No payment in respect of the above salary or deductions have been made. Now we've dealt with the salary, we're now dealing with what we call the additional contribution. Okay, so he gets his salary, but apart from his salary, the business also gives him or contributes an additional amount to his pension fund. Okay, guys. Right, let's do the calculation. Let's go back to his contribution. Okay, so under pension fund, how much does T-Mayor contribute?
660 rand.
660 rand. Okay, and for every 1 rand contributed, the business contributes 1 rand 50. So 660 times 1 rand 50, it should be 900 and something.
And 90.
And 90.
Yeah.
Okay, so 990. So this is my additional contribution. Now the two accounts affected, guys, you're still going to find one account will be an expense because the business has incurred an expense of 990, and the name of that expense will be pension fund contribution. Okay, so pension fund contribution is our expense and therefore belongs in which financial statement?
So income statement.
Income statement. So this amount will go into my income statement. Right, who am I owing the 990 to?
Pension fund.
I'm owing it to the pension fund. This is a liability, guys. And remember, again, liabilities will go in your trade and other payable notes. Okay, you guys got that. Right, so let's do that. Let's go to the income statement first. So in my answer sheet, income statement. Okay, there we go. Right, I've got pension fund contribution. I've already got a total from that pre-adjustment trial balance. I'm now adding a further 990.
Rand, yeah.
And then I'm also including 990 under pension fund, so plus 990. Okay, right, done with the first adjustment.
Yay.
Kumi, how are we doing in terms of questions? Are there any questions? Can
up
I
to
move on?
Well, up to so far, the mindsetters are keeping up.
Okay, brilliant. Right, guys, the next adjustment. The business donated, okay, let's start again. The business donated inventory to the local high school, selling price 1,200, cost price 730. Now remember, whenever we're dealing with donations, the business will always donate at cost price. Or let me say that one more time. The business will always record the entry at cost price. So the cost price is what I'm focusing on, the 730. The selling price is not really needed. Right, in terms of the two accounts that are going to be affected, the first account, the business has made a donation. So they've now incurred an expense. So the first account will be donations. Okay, and the second account, what is the business donating?
Inventory, so trading stock.
Inventory. They're donating trading stock, so the second account will be trading stock. Right, let's look at donations. Donations is an expense, therefore needs to go in that income statement. So this 730 will be recorded in my income statement. Trading stock, remember guys, in my answer sheet, I've got a trading stock account, but let's look at what's going to happen to trading stock. Okay, the business is giving away stock. So the moment you give away stock, your stock becomes less. So trading stock will be credited with this amount of
730 rand.
730. Okay, so let's do just that. Let's go to our answer sheet. Okay, I'm going to go to the income statement first. I don't think we have an entry for donations. Okay, so if we go to our operating expense, we now have, no, I've got it in, isn't it?
Yeah, you do.
So I do have it in donations, and that amount for donations is 730
30 rand. Can I just ask?
Yeah.
Cost of sales won't be affected because we aren't
No.
making a sale here.
No. Okay.
Okay.
Cost of sales is only affected if you are selling stock.
Okay.
Okay, here we are giving stock away.
So it'll just be the two.
It will
okay.
just be that.
Okay,
Okay,
perfect.
I love the way Pumi is paying attention. Okay, right, so the 730 recorded in donations. Let's now go to our trading stock ledger account. Okay. Right, so there's my trading stock ledger account, and remember,
It's an asset.
yeah, trading stock is decreasing by
730.
730. There would have been a general journal made to record this transaction or this adjustment, and the contra account will be donations.
And then we would use the end of the financial year
End
as
of
our
the
date.
financial year.
Okay.
Remember, at this point, everything is happening at the end of
Okay,
the financial
perfect.
year. Okay. Right, done with the second adjustment. Let's go back to our questions. Okay, let's now move on to adjustment 3. Okay, should we take a break?
Yeah,
Kumi?
I'd
Okay.
like to interrupt you, sorry.
No, that's fine, that's fine.
Okay. All right, then, mindsetters. Right now, I feel like I really need to pick up my accounting A game, hey? Because really, Tato is really, brilliant like that. Guys, please make sure that if you have questions, like I have so many questions, please post them on our Facebook page so that we can try and answer all of them. Right now, go grab a glass of water and come back. We'll see you now. Hello, mindsetters. Welcome back from that quick ad break. And yes, today in studio we have the brilliant Tato, who was really trying to show me a few things right there on the ad break. Tato, tell me, what do you love the most about accounting?
It's just like clear. It's like there's no wrong or right, and it's just logic. Like, do you owe or do you have to, receive money? And it just makes sense. It's not like English where you could be right or you could be wrong. It's key.
Oh, okay. Well, I know definitely after this show, I'm going to get Tato to please help me. A few things right there. Mahesh, let's do this.
Okay, yeah, let's do this. I'm a bit disappointed. I thought Tato was going to say the best thing about accounting is my accounting teacher.
That too.
Just kidding, Tato. Yeah, guys, accounting is extremely logical. I mean, once you look at the information and you work out what gets debited, what gets credited, what is increasing, what is decreasing, it makes a lot of sense. Okay. Right, let's move on to our third adjustment. A debtor returned goods, claiming that the quality was inferior. Okay, so you've got a customer who bought something, not too happy with the quality, and obviously wants to return the item or return the item. The selling price is 800 Rand, and the markup is 60%. Okay. Right, now guys, in terms of this particular adjustment, you're going to find that we're going to be looking at the selling price of the item as well as the cost price of the item. Now let's focus first on the selling price. The selling price that is given to us is an amount of 800 Rand, and obviously there's two accounts that will be affected. Now the first account is your debtors control, because you've got a debtor who's not happy with something and deciding to return the item. So the first account is debtors control, and let's look at what's going to happen to debtors control. Debtors control, okay, is an asset, and if a debtor returns an item, he's no longer going to owe you that amount of money. So debtors control has to decrease by this amount of 800 Rand. Now remember guys, debtors control is recorded in your trade and other receivable note. So let's go and decrease debtors or trade debtors by this amount of 800 Rand. So let's go to our answer sheet. Okay, so in our answer sheet we've got trade debtors, and we are decreasing our trade debtors by that amount of 800. Okay, you guys got that. Right, let's go back to the adjustment. And let's look at the next account that will be affected. Right, now remember guys, the other account affected is debtors allowance. But debtors allowance has already been closed off to sales, or rather, we've already sent debtors allowance to our income statement. Let me just quickly show you guys exactly what I mean. So if we go to our answer sheet, okay, under sales, I've got my sales total before adjustments, and this amount of 5,730 represents my debtors allowance. So if I go back to my information, the other account affected, yes, I know it's debtors allowance, but the item affected in your income statement will be sales. Okay, now remember, what's going to happen to sales?
Sales is going to decrease.
Sales will decrease. So I'm going to subtract 800, writing it on the wrong side. Let's just fix that. Okay. All right, so I'm going to sales. I'm going to decrease sales by that amount of 800. All right, so let's do just that. Let's go to our answer sheet. Sales minus 800. Okay, first part to the adjustment, cancelling of sales. Let's now go to the second part. If I cancel sales, because that's exactly what I've just done, what else must I cancel, Tato?
Your debtors control.
Okay, I've done debtors control.
Then your trading stock.
Okay, trading stock, in other words, I'm looking at?
Cost price.
Cost price.
Yeah.
So I need to obviously make an entry or an adjustment for my cost price as well. Again, cost price, in terms of the information given, the cost price is not given to me, but I'm given a selling price of 800 and a markup of 60%. Okay, now this is a very basic, straightforward calculation to calculate my cost price. So I'm taking my sales times 100, divide 100 plus markup, so 160, and my selling price, sorry, my cost price on this item, an amount of 500. Right, let's look at the two accounts that will be affected. The first account will be cost of sales, and the second account, Tato?
Trading stock.
Trading stock. Okay, the second account will be trading stock. Right, I want to start with trading stock first. Customer is bringing stock back into the shop.
increasing.
Okay, so my trading stock is going to increase. Okay, think about it. You buy something from Woolies or Edgar's, you're not happy with the item, you return the item, okay? They're going to take the item and put it back on their shelf. Okay, so their trading stock is increasing by 500. Right, so let's do that. Let's go to our answer sheet and let's go and increase trading stock. Okay, so trading stock is increasing by 500 Rand. General journal, and the contra account for this will be
Cost of
sales. Okay, guys, you know about abbreviations. Teachers are allowed to abbreviate, but students are not. Okay, right, so let's now go back to the information. Right, so I've sorted my trading stock. Let's now look at cost of sales. Now remember, guys, what did I do to sales?
You decreased it.
I decrease sales. If I decrease sales, it means if I'm cancelling a sale, it means I haven't incurred an expense. So I also need to decrease my expense, in this case, cost of sales, by this amount of 500 Rand. Okay, right, so let's do that. Let's go to our income statement, because that's where we're going to find cost of sales. Cost of sales, there we go, and we are decreasing cost of sales by this amount of 500. Okay, right, are there any questions, Pumi? Can we carry on?
No, we can carry on.
Okay, right. Guys, adjustment number 4. No entry was made for an invoice received from Trumpet Transporters for the transport of goods purchased an amount of 200 Rand. Okay, now guys, please remember, the moment you see invoice received, it means this took place on credit. Okay, so let's look at the two accounts that will be affected. Now the first account, I've received an invoice. So I'm now owing money, or the business is owing money to a creditor. Okay. So the first account will be Creditors Control. Whenever I pay for transporting, let me say that again. Whenever I pay for transporting trading stock to the business, okay, what happens to the value of your trading stock?
It increases.
It increases. Okay, so the other account affected will be trading stock. Right, so let's start first with Creditors Control, and then we'll focus on trading stock. Creditors Control, okay, I've transported my goods, and obviously it's on credit, so I'm now owing money to a creditor, so Creditors Control is going to increase by 200 Rand. Now, in which note do I find Creditors Control?
Trade and other payables.
Trade and other payables note. So let's go to Trade and other payables. Right, Trade and other payables. Okay, trade creditors is going to increase by 200. Okay, simple, guys. It really is simple. Okay, let's now look at what's going to happen to trading stock.
Can I just ask you something there? Do we add the amount to trading stock because we're using the perpetual system?
Yeah, we are using the perpetual system. Very good question.
Okay.
Because in the periodic system,
then you would have carriage on purchases
you have
as an
a
account.
separate account called carriage and purchase,
Okay.
but because it is the perpetual system. How do we know it is the perpetual system?
Cost of sales
Because
has
we've
its own
got-
account.
Oh, she's brilliant.
Oh, wow.
She's brilliant.
Yeah.
Right, so cost of sales is included, so that's
Okay.
how we know that it is the perpetual
Okay.
system. Right, so my trading stock is increasing. The value of my trading stock is increasing by 200 Rand. Okay, so trading stock, let's go back to our answer sheet. Right, so I've got trading stock and my value increasing by 200 Rand. Okay, general journal, and my details will be Creditors Control, is that right?
Yeah.
Yeah, the detail should be Creditors Control. Okay, so let's fill that in. Creditors Control.
Your abbreviations, ma'am.
Are they bad?
No, it's fine.
Okay.
I think teachers are allowed to.
Teachers are allowed to. Thanks, Pumi. Teachers are allowed to abbreviate. Students are not. Okay, right, let's go to our next adjustment.
Okay.
Right, your next adjustment, something that students are very familiar with. Physical stock taking revealed that the following were on hand on the 28th of Feb 2014. Trading stock, 72,800, and then I've got packing material, 480. Right, so let's start off with trading stock first, and for that I need to go to my answer sheet. Okay, there we go, there's our trading stock. Right, now remember guys, here we're going to be comparing what we should have according to our trading stock account and look at what we physically have in our shop. Okay, so let's start off with our general ledger trading stock account. Tata, I'm going to ask you to work with me.
Okay.
So I'm obviously balancing my trading stock account.
Okay.
So I started with an opening balance of 78,400.
400 rand.
So let's put that in, 78,400. I'm then adding
The 500
500 plus the 200. And then, guys, I am subtracting the donations, 730. So according to my records, I should have 78,370. 78,370.
I got that, yeah.
Okay, so according to my general ledger. Right, now if we go back to our adjustment, let's look at what we physically counted. Trading stock, physically on hand, 72,800. So in the shop, that's how much of stock we have on our shelf. Okay, so let's fill that in, 72,800. Okay, so this is sitting on the shelf. Right. Okay, Pumi, I'm going to put you in the spot.
Okay.
Right. On the shelf, we have 72,800. But according to our books, we should have 78,370 Rand worth of stock.
Okay.
Okay, now what do you think happened? We obviously don't have what we should have.
Okay.
Okay, so do you think there is a possibility that there could be theft taking place?
Stock went missing.
Stock went missing,
Okay.
and one of the reasons could be theft. Okay,
okay.
right. So in this case, guys, there's obviously a trading stock deficit. Please remember, you can come across a trading stock surplus, but in this case, there's a trading stock deficit of, we're obviously subtracting the two figures, and there is a deficit of
5,570 Rand.
5,570.
Can I ask you quickly then? If it was a surplus, would that go then under other operating incomes?
Correct.
Okay.
If it was a trading stock surplus, it would go under operating income.
But then
in
it's
the
a
income
non-cash
statement.
item, so you won't see any cash for it. It's just...
Yeah.
Okay.
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 Right, so the 5,570, again, the two accounts, because there's always two accounts affected, guys. One account will be trading stock deficit, and the other account affected is obviously trading stock. Okay, so let's start with trading stock. Trading stock will decrease because there's obviously been theft or stock missing or stock could have been damaged of 5,570. Contra account will be trading stock deficit. Okay, and my trading stock deficit gets recorded in my income statement under operating expenses. Trading stock deficit, 5,000, Tato, please.
570.
570. Okay. Right. Should we take another break and then come back?
Okay.
Okay.
Alrighty. All right then, guys. Let us just take a very quick break, and please remember that you can always post all of your questions right there on our Facebook page. It is www.facebook.com/learnextra, or better yet, follow us on Twitter there at learnextra. Let's take a break. We'll see you after this. Welcome back from the break mindsetters. Right now we have Gugu joining us. Hi Gugu.
Hello,
How are you?
I'm good, thanks, and you?
I'm good. Are you ready to learn with us today?
Definitely, yes.
Oh, great stuff. All right then, Mahesh, let's do this.
Okay. Right, guys, we're now looking at the next adjustment, which involves asset disposal. So let's read the adjustment. The business sold a laptop on the 1st of February 2014 for 1,000 Rand on credit. So immediately from this information, there's an asset disposal that took place during the year, and it was sold on credit. So the 1,000 Rand immediately represents my selling price. Right, guys, remember, as you're reading, you make little notes, you highlight or you underline. The laptop originally costed 8,000 Rand. So that 8,000 Rand is obviously my cost price and the accumulated depreciation at the date of sale. Very, very important. Accumulated depreciation at the date of sale was 5,200 Rand. Right, if we read on, the accountant recorded the transfer of the cost price and the accumulated depreciation to the asset disposal account. No other entries were made. Okay, right, now Gugu, I'm going to ask you to work with me. In terms of asset disposal, remember, the purpose of drawing up an asset disposal account is I want to know whether I've made a profit on sale of asset or a loss on sale, isn't it?
Yeah.
Right, now if you make a profit on sale of asset, it goes into the income statement,
Yes.
and it's obviously an income or expense.
It's an income.
It's an income, excellent. If, however, you make a loss on sale of asset, remember guys, loss on sale of asset is an expense, and again is shown in the income statement, but this time under operating expenses. Okay, right, so in terms of what the accountant has done thus far, the accountant transferred the cost price. So the cost price, okay, equipment, the cost price is 8,000. The accumulated depreciation at the date of sale. Now remember guys, in asset disposal, especially if you have an adjustment of a sale during the financial year, you normally have to update accumulated depreciation. Now in this case, we don't have to update accumulated depreciation because it was already done. The accumulated depreciation at the date of sale, key at the date of sale, was 5,200. Okay, so that 5,200 has been already recorded by the accountant. Okay, details would be accumulated depreciation on equipment. Okay, so this part was already done. I don't know, maybe the accountant got lazy, maybe something came up, and he obviously didn't complete this account. So we now need to complete the account, calculate whether there's a profit or a loss on sale of asset, and take it to our income statement. So let's do just that. Right, we now need the selling price. How much did we sell the asset for? The business sold a laptop for 1,000 Rand. So there's our selling price, but it was sold on credit. Okay, so Gugu, if I had to ask you, with this 1,000 Rand, right, let's look at the two accounts that would be affected. One account has to be asset disposal because that's where I record my sale.
Yes.
Okay, sold on credit means someone is now owing the business money, isn't it?
Yes.
Okay, so who normally owes the business money?
A debtor.
A debtor. So the second account, absolutely brilliant, is debtors control. Okay, right, I've got brilliant students. I do. Okay, right, so the second account will be debtors control. Let's firstly record this in our asset disposal T account. So on the credit side, I'm going to record the sale, which is 1,000 Rand. Okay, and my debtors control goes into which note, guys? Which note? Absolutely perfect. Trade and other receivables. Let's go to trade and other receivable on our answer sheet. Okay.
Mahesh,
Yeah.
we have like a minute right now.
Do we just have a minute?
Yeah.
Okay. Right. Let's quickly enter this. So debtors will increase by 1,000 Rand. Okay. And now I'm rushing, guys. Okay. And remember, asset disposal, you obviously now looking at whether you made a profit or loss on sale. 8,000 minus my 5,200, I've got a book value of
2,800.
2,800. I've sold the asset for 1,000, so I therefore made a profit or a loss.
A profit.
Do you think?
You
Profit.
made a loss.
You made a loss. Okay, we'll forgive you because of the time. So minus the 1,000, I've made a loss of 1,800. It's worth 2,800, but I only got 1,000. So I made a loss of 1,800, and that 1,800, guys, goes into your income statement under other operating expenses. How's that for time?
Okay.
Okay.
I think we have to wrap up. I'm
Okay.
sorry.
No, it's fine. It's fine.
All right.
Okay.
Thank you so much, Mindsetters, for watching the show today. But before we say bye-bye, Gugu, would you like to say a quick shout out to your friends at home?
I'd just like to say hello to everyone at Rand Park High and hello to my family.
Oh, that's so really awesome. Guys, we'll see you next time. Thanks for tuning in. Bye-bye.